Hello, good afternoon. You're tuned into Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. And this Monday afternoon, the market doesn't seem to be in a great mood. Yes, you're seeing that green tinge on the Nifty, but we've been hovering around that just 19,400 range. And that's also solely on account of the big move that we're seeing in Reliance, because that's contributing as much as 90 points on the upside. Because other than that, Bank Nifty is down in the trading session. Ditto can be said for the broader markets as well. They're all down in the trading session. The top laggards include names like TCS, Titan, as well as Bajaj Finance. All of these stocks are putting pressure on the markets, and that's the reason you are seeing that the upside on the Nifty right now is very limited. But separately, what else is happening in the market? There's a lot of action when it comes to the metal space. In fact, the Nifty Metal Index has hit a 5-month high on an intraday basis. You have names like Steel Authority of India, Tata Steel, JSPL. These are all the stocks which are up anywhere between 2 to 5%. So a lot of momentum built up when it comes to the metal space. Life insurance companies are also in focus. Remember, over the weekend, we got the life insurance data for the month. It's been a decent double-digit growth across the board for the likes of ICICI Pru, HDFC Life, Max Financial. That data should come up for you on the screen. So apart from LIC, which has seen a bit of a decline, as well as SBI Life, which was a bit muted, rest of the counters have reported a double-digit growth, and you can see that reaction coming in on the individual stock prices. IT, however, is on the back foot. Looks like that Street is not willing to bank too much right now on the earnings. Of course, TCS HCL will come out this week itself. LTI Mindtree will be next week, but Citi has opened a bit of a negative catalyst watch there. They are saying that Q1 is likely to be weak, and there could be some headwinds to that double-digit growth that the company is targeting. So a bit of a mixed picture coming in today, and barring Reliance, there's nothing much exactly in the market.
Nothing much exactly. In fact, Reliance is single-handedly actually holding the Nifty up. Had it not been for RIL and the kind of move that you're seeing on the stock price, holding up in excess of 4% and contributing, I think, to about 75 or 80 odd points to the Nifty move today, we would have been in the red. But yeah, the geofinancial demerger, now that the record date is on July 20th, and the news on Reliance Retail, which is going to be cancelling those 34 lakh shares held by few shareholders. The market's reading, of course, is that the demerger process for Reliance Retail and eventually Reliance Jio, that may have begun with this particular reject that the company is making at its end. And that stock, of course, in a tizzy as we speak right now. Z, that's really been the newsy one, hasn't it? SAT has now refused to grant interim stay on SEBI's order. You'll have Goenka as well as Subhash Chandra who are going to be filing a reply within 2 weeks on the interim order, and that's keeping the stock a little bit at bay. When, of course, this news came out, you had a crack of almost about 5 to 6 odd percent coming in on Z, and from there, of course, this has recovered, because remember, this is not the final verdict on Z. There are many more miles to go in that sense. Titan, and this is an interesting one. Earlier in the morning as well, we flagged off that, Morgan Stanley has downgraded the stock to now an equal weight from the earlier overweight. Although the Q1 commentary from the management was extremely strong, but they believe that, the stock is now overripe in terms of valuations. 3% lower for Titan. Let's see whether there are any buyers at this dip coming in. There's Aarti Industries as well, and Axis Capital has downgraded this stock too to now neutral from the earlier ad, and they've also revised their price target now to 470 as opposed to 570 earlier. So that is also weighing heavy on the stock as we speak right now. But for the overall market, are we looking weak? Ex-Reliance, let's take that question forward with our chartist Kunal as well as Naresh, both join in on the show right now. We, of course, have Andrew Holland as well, who we will get to in just a second from now. But Kunal, if I could, start off with you. Ex-Reliance, is the market really looking that weak? Because I think Reliance alone is contributing to about 75 to 80 points of the Nifty move.
Good afternoon, Aisha. So I would not call it weak, but I would call it as a consolidative market because, we flagged off this previous week, in fact, the start of the previous week, that the market indicators are getting into a frothy zone. And when that happens, and we've highlighted a lot of indicators at that point in time, whether it's the market breadth, whether it's the internals of the index, as well as the indicators on the Nifty as well as on the Bank Nifty. When you see such kind of a zone for the indices, we expect a multi-week consolidation. So we've just about started a process of 1 week of consolidation. My sense is that should probably carry on for the index over the next few trading sessions, and that should not be bad for the indices because we've gone through a very strong uptrend in the last 1 week prior to the consolidation. So we moved up some 600 to 800 points on the Nifty in a matter of 4 or 5 trading sessions. Now to digest those kind of gains, to elevate the supports, the markets have to consolidate, and that's what I think we are doing over the last many trading sessions. So 90,000, 90,200 remains to be a very strong support zone. And the closer we are towards this territory, the better the risk reward is to initiate a fresh buy on the index.
So a bit of consolidation perhaps in the very, very near term. Andrew, what is your view as far as Reliance is concerned? Do you concur with the view that everything is coming together positively, whether it's the telecom business, the retail vertical, the news about the impending IPOs, and of course the OMC business?
Yeah, I mean the market's been looking at this kind of unraveling of the different companies through IPOs or strategic stake sales going forward, and this has been the catalyst. I mean, we've all been working on potential kind of breakup values of the overall value for Reliance. So I think the market is now liking that the fact that some of this is happening, and that was always going to be the catalyst for the share price to move higher. We'll probably see more momentum as the market kind of grapples with the valuations and possibilities that there could be kind of strategic stakes taken by either private equity or some companies overseas in some of these companies prior to an IPO. So I think that's what the market's looking at, and that's why it's getting more excited.
Naresh, in terms of individual stocks, and I can see metal sectorally is actually not doing all that bad. Tata Steel, JSW Steel, Jindal, they're all seeing some traction. Even SAIL is actually holding up 3.5%. Any meaningful trade here?
So continue to focus on the leaders which have been in this segment, that is Jindal Steel and JSW Steel. So if you look at Jindal Steel, it hit a new all-time high 2-3 days back. So that's a strong trend. 600 was a resistance for a long time. We've broken above 600 levels. So now 600 becomes a stop loss, and one could rally on this move towards 660, 700 also. So Jindal Steel has been a clear leader. The second one is JSW Steel, which also made a new all-time high. 780 to 800 has been a major resistance zone. It was tested 4 to 5 times over the last 2 years. So that could be a stock which could take leadership, go towards 850 levels to 880 also. So there is momentum across the metal pack, but I would prefer to go with these two names, which have been clear leaders. The other names like SAIL is still down from that 150 point to 90. Tata Steel is also down, still 20, 30, 40% away from the top. So out here, better to stick with the leaders, which is Jindal Steel and JSW Steel.
With the leader, just talking about some more buzzers before we move forward. You have Inox Wind, which is up around 11%. Mazgaon Dock is higher by 8%. Electra Greentech has been going very strong from the get-go. SEAT, Easy Trip Planners, Keystone Realtors, which is Rustomjee, AkzoNobel, a lot of these counters which are doing quite well. On the losing side, it's only Idea Forge and Prism Johnson as well as India Mart a bit, and Aarti Industries that we flagged off. But other than that, most of the market is doing all right. Andrew, the entire auto space, would you like to play it by the frontline names, the two-wheeler and the four-wheeler companies, or auto OEMs, and even the tire stock is something that one should look at?
So we've been playing it mainly through the two-wheelers and four-wheelers, but individual stocks, obviously, there's been a change in the kind of viewpoints on a number of them. With the new kind of bike launches that are coming in Harley Davidson and so forth, so there's obviously going to be more competition, and that's going to drive some of the winners ahead. So that's the way we've been looking at it. But I think the ones that continue to be the winners are the OEMs, because I think the industry's growing. There might be some very competitive measures taken by companies to increase sales, but that's all great for the OEMs. So OEMs is probably where I would continue to play in the shorter term, and I still think that the EV kind of revolution is still taking place, and there's no clear winner at the moment. We will see who partners with whom in the future, and again, I think that's those are the catalysts which we have to wait for before picking your winners on the EV side. But in between all of that, obviously the OEMs are going to start supplying.
Tata Motors, let's bring up that stock since we're on the subject of autos. And one of their bigger statements when they did come out with the JLR reportage was that they do expect JLR to report positive free cash flow of over 400 million pounds in the first quarter. And that's something that the street has really liked. After hitting a high earlier in today's trading session, Tata Motors, of course, has eased off from the session top, but still holding on to 622 levels as we speak right now. Kunal, since you've been bullish on this one when perhaps no one on the street was, and pretty vocal as well about it, what do you see next? 700 in the due course?
Well, yeah, now I think it could be, this is blue sky territory for Tata Motors as a chart, because this is, a level the stock had seen, or in fact, it's crossed over the levels the stock had seen in 2017. So after a gap of almost 6 years, 5, 6 years, the stock has managed to show, it's a class of its own. I would probably sense that this is a start of the very strong uptrend for many of these auto names. So now it's very difficult to try and fathom that where could the top be for many of these stocks, because when you look at it relatively from 2017, it's just that the stocks have broken past above their previous 6-year, 7-year highs, be it Tata Motors, be it Maruti, or such other names. Now, in technical parlance, we look out for at least a 15 to 20% target higher than the previous highs or the previous swing highs when you see such kind of a multi-year breakout. So even if you try and do that math, that probably takes the stock back towards that, or upwards of 700, 720 mark over the very near term. So at least from a near-term play, 700 to 720 is what I would look out for in Tata Motors.
700 to 720, that's something to watch out for as far as Tata Motors is concerned. But hold that thought, guys. We are also getting the data from Amphi this time around, and the data was quite impressive because the SIPs really continue. In fact, they were at record high levels. There was quite amount of inflow when it comes to the small cap schemes as well. The total equity AUM has also seen quite a bit of spike. So a lot of really data points coming in from the latest Amphi data. Let's go across to Sharat to find out the key details. Sharat?
Well, yes, we'll be looking at June's Amphi data, and the SIP numbers are near the record levels, and this is coming in for the second straight month where the SIP monthly numbers are above the 14,000 crore mark. So the SIP numbers are near the record levels, and looking at the flows itself, there has been an outflow coming in. Of course, this is the adjustment coming in from the fixed income side because of treasury management, but overall the equity flows itself, that has come at 3-month high levels, and looking at the equity AUMs as well as the total AUM of the mutual fund industry, that is coming at the record high numbers. Now looking ahead, of course, in the details itself, their inflows has been there in the fixed segment, in the low duration and the money market schemes, but when it comes to the mid caps and the small caps, that is the place where the fund action has been there, and right from the 5th straight month inflows has been recorded. And looking at for the small cap fund itself, it's got its highest all-time high levels of monthly inflows of more than 5,700 crores as it was reported. Now, of course, for the second straight month, due to sector rotation, the large funds saw outflow coming in, and also outflow coming in the focus TLS and the flexi cap equity segment as well. But overall, a very strong set of retail numbers coming in when it comes to the Amphi data.
Okay, we'll leave it at that. Thanks very much, Sharad, for highlighting that data. In fact, let's welcome on board NS Venkatesh, Chief Executive at Amphi as well, and dissect the data a little bit with him. Mr. Venkatesh, great to have you on the show today. Your SIP numbers are above that 14,000 crore levels for the last 2 months and at near record high levels as well. How's the investor confidence looking like? And when do we expect to touch the 15,000 crore mark?
Essentially, we believe that the SIP numbers are really good. The confidence and trust of the retail investor is very high. They have continued to participate in the mutual fund through the SIP route. So that is where you are seeing for the last 2 months around 14,700 odd crores of money coming in through the SIP route. Having said that, I would say that maybe August, September time pay, we should see the 15,000 mark getting breached.
Okay, watching out for that 15,000 mark. But the question is also with respect to the kind of excitement that we are seeing around the small cap funds. Is that something which has got you a bit worried? Your view as to how you're viewing these flows into the small cap category?
The small cap funds are showing good traction in the sense that around 5,000 crore worth of money has come into the small cap funds. That is essentially due to the fact that the small caps had done a steep correction during the correction phase. So the investors now believe that with the market having a good momentum, the small caps are bound to go up in a faster pace. So they want to participate in that story. So that is where they are putting money into the small cap funds.
Mr. Venkatesh, great to have you on the show today and dissect that data for us. We're going to take a very quick break on that note with news that the broader end of the market is definitely off the session highs, as is the Nifty, while Reliance is still holding tall by 4%. The rest of the market is looking a little bit brittle. We'll take a very quick break and continue our chat with our experts on the other side.
Welcome back. Well, not much happening at the index level, but then there are a lot of pockets which are actually showing signs of outperformance or underperformance. One such pocket of outperformance is the life insurance companies. Of course, they are reacting to the data that we got on June. Andrew, what's your take regarding entire, life insurance pack or insurance in general? Because they were beaten down quite a bit after the budget announcements. HDFC Life has moved up already. What's your take about others as well?
Yeah, no, the long-term growth story for the life insurance companies, looks very positive, and it's a multi-year, kind of trend which we're going to continue to see as more and more people move towards insurance, either medical or life insurance going forward. So, I think what happens is that the market gets overly kind of confident that the growth trends are going to continue at the rates which they are, which I have no problems with, but they just get a little bit over kind of confident that it's all going to happen next week. It's going to take some time, and I don't think the winners have really been really kind of shown themselves yet. So I think it's a sector that we're starting to like more and more, but it's something that we'd rather be in the banking sector at the moment rather than the life insurance.
Right. Well, this week is also going to be when we officially kickstart the big earnings as well. On Wednesday, you have HCL as well as TCS both reporting their numbers. On Thursday, you'll have Federal Bank as well as Wipro. Friday will be Bandhan Bank, JSW Energy, as well as Just Dial. Supreme Court hearing the Adani probe case on July 11th. I think that's already known. And on Saturday, you'll have Avenue Supermarts as well as Rallis 2 reporting their numbers. But Anisha, important one for IT, HCL, TCS, Wipro, what do we anticipate?
Well, we're anticipating that hopefully the street has already priced in the worst, and there could be a sort of surprise if at all, because in terms of the expectation, it's really muted. We are looking at a paltry growth of maybe 0.2% on constant currency for TCS. Margins are expected to slide. No surprise there because of the margins, because of the wage inflation that they would be taking in the quarter gone by. So there's a wage hike that usually happens for TCS. The bigger question is with respect to the buyback. Now, Jefferies was expecting a buyback. Till now, there has been no announcement on the exchanges. So the street is a bit divided whether it could still come or not, but that's something that at least Jefferies is expecting. But the range is really wide. There are brokerages on the street which are expecting a decline to the 1.5% as well, to the growth of around 1%. So very, very wide as far as that is concerned. Of course, the key would be Kriti's commentary. This will be the first time that he'll talk as the CEO and not CEO designate. So any change in strategy will be important. Plus what they're saying with respect to how demand environment has changed is something that you'll have to watch out for. And ditto for Wipro and HCLTech as well. From HCLTech, of course, whether they maintain the guidance or not will be important. But Wipro guidance was very weak. They had pointed to a decline. So that's pretty much factored in.
Oh, yeah. Okay. Interesting one for IT. Andrew, what is your own sense? Is the worst behind for IT, or could there still be some skeletons in the cupboard?
No, I'm not sure there's skeletons in the cupboard, but I think that there is the possibility of further downgrades to earnings before you start to see them pick up going into next year. So I think that's the obvious kind of downside for the sector in the very short term. It's had a reasonably kind of robust run of late. That's obviously on the back of what's been happening in the US with tech stocks. So you can see further ahead, but in the short term, there's going to be pressure on the earnings, and I think that's what the market's kind of grappling with at the moment. I think if we see more downgrades and the share prices take a hit because of that, it's probably the time to be nibbling away. Going on the back of the future will be a lot better for them. But in the next 3 to 6 months, it's going to be a tough market for them overall in terms of earnings growth.
See if that does really fructify. For now, the market is pricing in the worst already. Let's see where it heads from there. Andrew, thank you so much for making time and speaking with us today. Pleasure having you here. But you know, the other thing that we've been talking about since the start of the day itself has been the weather gods. They have been rather unkind to North India with a sudden influx of rain that happened in a lot of regions, right from Delhi to what's happening in Himachal Pradesh. There are very, very disturbing videos that we have seen of buildings collapsing, people getting stranded, water gushing through the streets, and all of that is something that we're watching out for at this point of time. Those are some of the visuals for you up on the screen. So within a matter of 2 days itself, very, very heavy rainfall has been recorded in a lot of regions. In fact, for Delhi itself, it was the highest single day rainfall since 1982, and now Yamuna too is at very, very critical levels. In fact, if we have our colleague joining us right there from ground zero to talk to us about how the situation is in Delhi right now. Take it away.
You know, as you rightly mentioned, you know, this was the press conference of the Chief Minister just after the emergency meeting that he chaired on the waterlogging issue, you know, after we saw the drastic visuals that came in yesterday. And now the important points, you know, what he mentioned here, you know, first of all, he said that it was unprecedented rains. You know, he mentioned that, you know, the infrastructure of Delhi is not ready, you know, to bear such a heavy rainfall. And that is why he is saying that, you know, such a condition, you know, happened yesterday. But now he's, you know, he also said that the boats have been kept in place. And if, you know, if the Yamuna level, you know, rises, they're already in touch with the CWC. The boats have been kept there. You know, the relief camps have, you know, already been set up. The people have been identified. There are 60, you know, there are 6 districts that are going to be more affected. And those are also identified. And once, you know, the level of Yamuna crosses, you know, the 206 mark, all the people will be evacuated from there. Now, he also went on to say that there was heavy waterlogging that was, you know, witnessed in the NDMC area, which is a VIP area. Thus, the order has also been given to the NDMC officials to, in fact, come out with a detailed plan. Not just that, you know, we have also seen how many, you know, many places the roads had caved in, you know, craters were formed. On that, the Chief Minister today said that orders for investigation have been given to all the officials here. Not just that, he also said here that, you know, if we talk about the potholes that have been formed on the roads as a temporary relief to the people, all the authorities have been given orders to cover those potholes. He said, you know, that all this rain was, you know, unprecedented, and he again reassured that Delhi is prepared. But the question remains here that the people are also saying that this is the condition every year, and all the action that we are seeing that the government is taking, why can't those action be taken, you know, prior to the monsoon so that the people do not have to suffer so much? Over to you.
Right, we leave it at that. That, of course, is an eye on the sky, which is quite imperative nowadays. Let's now take in some closing trades as well, considering that we're winding up for the day and we've completely cooled off from the session top, whatever little it was. Reliance also ebbed off just that wee bit, a little bit, really. Kunal, any closing ideas from you?
Havells is a stock which I would look to trade on the buy side. I think that's a stock which looks attractive. In fact, over the last 5-6 days, it's been forming a base at this 1275, 1280 mark. So Havells is something which I would look to trade.
What about your closing strategies?
So that would be a buy on Bharti Airtel. The stock has now made a new all-time high, even trying to cross that highs done on that MSCI Tech. Clearly, slowly and steadily, the stock from 850, 860 has moved up to 880, 85 levels. The momentum is set here, slowly could go towards 910, 920. So that's a trade I would go with.
Okay, so that's the top trade, Bharti Airtel. That's definitely showing a bit of a momentum in the trading session today as well. But on that note, what we'll do is slip into a very short break because the market is slipping a bit. We'll track that when we come back.
Back with closing trades right here on ET Now. The closing trades have completely fizzled out. We're lying absolutely quiet right now at an index level. Of course, Reliance continues to hold a buzz, still up 4% on the futures. You've got metals really pushing forward. So SAIL is up 3.5%. Tata Steel, Jindal Steel, they're all looking up along with JSW as well. Some of the insurance plays, like we were earlier highlighting, not looking bad. HDFC Life taking the lead. Bharti is not looking bad at all, holding up 1.5% as we speak. Titan, of course, is the one which is really breaking down after that brokerage note that we highlighted earlier in the day, downgraded this stock on account of the valuations that it's currently quoting at. Remember, Morgan Stanley has now downgraded the stock to an equal weight with a target of 32.07. Naresh, do you sense further pressure for Titan at 30.40 right now?
So the stock has moved in a one-way manner. So a pause going back to 2900, 2950 would be normal. So the stock was at 2350 back in March, mid to March end. And from there it went to 3200 levels. So a pause going back to 2900, 2950 is what I expect. So there should be some more pressure, but it should be a slow and steady drift. Not expecting a one-way fall going from here. Closer to 2900, 2950 should be a pause, and then it goes sideways. And the stock has a tendency to go sideways after a big run, and it could be weeks and months. So the last time, multiple times it went to 2750, it went sideways. So expect the recent top would be not crossed for quite some time. So on the rise, it's a sell with a stop loss at 3200.
Coming in as far as Titan is concerned, Mayuresh Joshi is also joining us on the show. Mayuresh, let's begin with Titan itself. It's been a very steady performer, steady wealth compounder over many, many years. Do you expect this one to be a slow year for Titan going forward?
Afternoon, Nisha. Might be the case, but looking at the update that most gold and jewelry companies have given, including the likes of Titan and Kalyan, I think the numbers seem to be sustaining, at least as far as Q1 or the first half is concerned. A lot of the wedding season coincides in the second half itself. A large part of the jewelry market, 60% or more, is associated with the wedding season market itself. And to a large extent, the organized market is expected to grow at a compounded pace from 32% as the overall market share to almost 40% in the next 2 to 3 years. Somewhere, I think the first 2 quarters might see some slowness come through, but a roaring comeback can be expected in the second half itself. In terms of the market opportunity itself, the expectations in terms of the market size itself compounding at a pace of 9 to 10%, and with organized players probably gaining more strength, these become secular structural stories as this part of the story unfolds. So yeah, I think some softness might be expected on a sequential basis, but to a large element, I think over a longer period of time, Titan probably remains a good bet holding the performance.
Okay, Titan remains a good pick for the long term. Meantime, let's take stock of the other stocks which are buzzing around as well. Akzo Nobel, as we pointed out, is higher by 7.5%. SIAT is doing quite well. Aegis Logistics is picking up. And you also have Welspun Corp, which is doing quite well in the trading session. In the last few minutes, of course, you have further gains that have been added on Indian hotels as well as Shoppers Stop. Kunal, talk to me about Inox Wind and Suzlon if you track both of these counters, because in the last 1 month or so, these stocks have, completely amplified, become at least 1x or 2x of what they were earlier.
Well, yeah, I think Inox Wind is interesting. That's a stock which has been a lot more consistent because, when we try and see the volume spread, we look at the way the prices have moved up higher and the adjoining volumes, which tends to move up higher in a synchronized manner. I think that's happened quite clearly for Inox Wind. The stock has confirmed breakouts of 2 very important resistances, and we are talking of a multi-year resistance. I think 2017-18, the resistance for Inox Wind was at 150-60 mark. 2022, if I'm not wrong, the stock made a high of closer to 160 levels, then corrected back sub 100. And now in the last couple of days or this last 1 month of price rally, the stock has broken past about 160 hurdles, which means that a major resistance has been broken along the way for Inox Wind, and that too with a lot of consistency in volumes post the breakout of this 160 mark. Suzlon, on the other hand, when you look at the charts, the stock has still a lot of resistances at play. So 2017-18, the stock made a high which was closer to 18.5 for itself. Even this month, when the price action rally for Suzlon is getting into an extreme, the stock has made a high of 18.45, which means again it's trying to, the previous level is trying to act as a major resistance. So we'll have to look out for a point where Suzlon crosses about this 18.5 levels and with the kind of volume spread which is required when you see a big breakout of a multi-year resistance. So Inox Wind looks attractive, could be traded at current levels, Suzlon, I would look out for a breakout about 18.5 levels. And if it sustains about those levels, that's a good zone to buy the stock.
Mayuresh, what's happening on Suzlon? You know, the market in pockets is quite excited about it. We've already seen a massive recovery from the lows, although on a very low base on Suzlon. And then there is that impending fundraise as well.
Afternoon, Aisha. So two, three things interesting happening for both Suzlon and Inox Wind. If you probably go back a tad bit in the periodicity of 2015 to 20, the input costs were significantly higher and the tariffs were a clear mismatch in terms of what these players were having in terms of their operating expenses. Therefore, I think a lot of the companies which were solely operating its wind business basically shut down. Now, with the new regulations coming through, expectations of 10 gigawatt getting added over the next few years, a lot of tendering activity, both from the public and the private side, expected to pick up steam. The expectations in terms of tariffs remaining extremely firm, with input costs very, very manageable at this point of time. The few existing players in the space at this juncture, including Suzlon, including Inox Wind, are probably going to be the biggest beneficiaries in terms of this regulatory change and move. Having said that, the interstate transmission charges, which have also been waived off, is a significant change in terms of creating a significant amount of operating margin improvement in their balance sheets, and therefore a lot of leverage can also get played out. A lot of debt, which was there on the books for a company like Suzlon, is expected to improve drastically in terms of both the capital raise that can probably come through, as well as improving cash flows as orders come in and execution for the market. So I think a lot of tailwinds, Aisha, for the sector, which is keeping stocks like Suzlon and Inox Wind in the moment.
So that's about Suzlon and Inox Wind. But Mayuresh, what's the view on the big one, Reliance?
So Anish, I think the developments which have probably happened in terms of the financials and also the partial buyback in terms of Reliance Retail, obviously it's accretive in terms of the earnings per share as well. If you probably map this along with the stock performance today, I think it's very logical in terms of Reliance showing a smart move in today's trade. But over a long period of time, if you probably drag this up over the next 2 to 3 years, the expectations from an immediate perspective in terms of how Singapore GRMs will fare, Reliance access to multiple feedstocks obviously will ensure that it gets a premium to those Singapore GRMs. Having said that, I think the overall business perspective, both from retail and geo, is expected to show significant amount of improvement over the next few years. From an immediate perspective, again, sequentially, there might be some element of slowdown happening because you probably seen a very heavy base last year. But if you elongate, as I said, over the next 2 to 3 years, those earnings might actually start compounding. At the same time, the capex that Reliance is probably doing towards green hydrogen over the next few years, they're still confident of maintaining their net debt, net EBITDA to very, very manageable levels, even with the kind of output that they'll probably have over the next few years. So immediate perspective, maybe a little bit of a softness because of the heavy base, but structurally over the next 2 to 3 years, I think it is placed very, very well in terms of the entire ecosystem, both on the retail as well as its O2C business.
Okay, so that's about Reliance, a lot of levers which are available there. But now let's go across to Sharad, because in the morning he was talking about Kolte Patil. That stock definitely saw a lot of traction today, which is the other stock, Sharad, which is on your radar as well as making a lot of rounds in the dealing room?
Well, yes, in focus we are having Campus Activewear, and what we are hearing from dealers is some buying is seen in certain HNI counters, and we did dig deep to the shareholding and we saw Havells family office of the promoters holding roughly 1.87% stake in the company. Apart from this, the stock itself is down 49% from its 22 level high levels, but however the valuations are still at a higher levels. That's what the analysts have been stating. And do remember that the volumes also today has been almost at 5 times its 20-day average. Now, of course, there are certain key triggers for the stock, but it's on the negative side largely. I would like to point out first is the rising competition being seen from the domestic as well as the global brands, and also there are low barriers to entry right now for the industry. Now, the brokering houses are expecting that the company has achieved its peak market share, especially in the current addressable market. Apart from this, the company will be focusing on rising their share when it comes to the mid-premium and above margin products, which will actually augur well, especially with the price hikes coming in and also increasing the ASPs, which is basically your average selling prices. Now looking at what the brokerage stake is there, so for the next 12 months itself, they're expecting the 12-month target price to come in at 357 rupees per share, indicating roughly 10% market return coming in over the next 12 months as per Bloomberg data. And recent report came from Ambit, where they have initiated their coverage with a sell rating with a target price of 272 rupees per share.
Okay, those are a couple of buzzing stocks right now in trade. But Mayuresh, what do you feel about the urban consumption trend? You think the earnings in Q1 will reflect that, or do you think the best is already behind us? And I'm going to include everything from a Manyavar to a Titan to the entire cluster, basically.
I think it is still holding up. For the better part of the last 6 to 8 quarters, the urban consumption has probably held up, and that's probably laid a lot of impetus in terms of the overall consolidated earnings for a lot of these retail discretionary players. I'll also put in Trent in that because Trent is largely a tier 1, tier 2 city kind of a franchise, which probably also indicates a lot of retail discretionary spending. But as I maintained, I think what you're looking at probably from FY22 to FY23, I think the base has become very, very heavy for a lot of these consumer-oriented companies. And therefore, to outbeat this in FY24 by a huge margin probably looks difficult. So I think this year largely will be a year of consolidation for a whole host of these retail franchises. I'll also put in the QSR players, even footwear companies that Sharad was mentioning. And therefore, a lot of these companies, if you look at management commentaries, Aisha, for the QSR space or footwear companies, they're actually foraying into tier 3, tier 4 cities. A lot of retail, rural penetration has already started happening to probably diversify in terms of the urban concentration that they probably have. But to answer your question, I think it's probably going to be a year of consolidation because you're not going to see a significant earnings beat happen on an annualized basis for most of these players within the space.
A bit of a consolidation, but Mayuresh, that doesn't seem to be the case for the new listings. I'm not sure if this is the case that the valuations have become, the promoters have become a lot more cognizant about leaving some, butter on the table for the retail investors as well. Or is it the fact that the market is pricing in a lot more? Because today as well, if you look at Cyan DLM, a bumper listing, Idea Forge that happened last week. Are you looking at any of these IPOs positively?
So I think the moves have been pretty significant, Anish, at this point of time. But I think the valuations have now gone out of whack with the kind of move that we've probably seen. Just to put a point in perspective, I think the kind of rallies that we've probably seen in the last 2 to 3 months, I think there is a feeling of missing out. I think that FOMO feeling probably exists between a lot of retail investors. And therefore, the kind of participation that you probably see, look at the subscriptions that have probably come through for these IPOs itself. I think there have been crazy numbers for this element in the primary market itself. So I think one element, I think a lot of feeling probably coming through, which is drawing a lot of retail investors to take their bets in the primary market. But with the kind of moves that probably see in a few of these listings that have happened, I think the valuations have gone out of whack. We should probably wait for pullbacks. Doesn't make sense at these levels.
Pocket which has been very active, besides, of course, pure play auto majors, has been the tires space. And I was just looking at the year-to-date performance of some of these stocks. Apollo Tyres, for instance, has shot up about 30% year-to-date. SEAT has given you a staggering 60% return. MRF has given a return of about 15%. JK Tyre up 35%. Balkrishna Industries up 9% as well. Mayuresh, go with the pure play auto majors, ancillaries, or a mix of both?
Mix of both, to be very honest, Aisha. Obviously, the few players like Bajaj and TVS, with the kind of response that they've now received, specifically Bajaj and Hero for their new launches, you're probably seeing sentimental moves. But if you map their 10-year standard deviations in terms of forward multiples, Bajaj at around 23 times, 10-year average around 17 and a half times, TVS around 28 times, 10-year forward average around 10-year average at around 21 times. Hero is probably more sanguine at this point of time. So wait for pullbacks. But tire makers become a very interesting story, I think, with the kind of new launches and the responses that they've received. But I think the OEM part, take the example of SEAT, which has moved significantly in the past 3 or 4 days. It services a lot of these two-wheelers. Take the case of Apollo or JK servicing a lot of the PV and the MHCV players in the market, which is held up both in terms of numbers as well as volumes every passing month. So the OEM part of the market is holding up pretty well. The replacement market was always the savior for these players, expected to continue doing well. And to a large element, input costs have gone down significantly, whether that be crude derivatives, nylon tire fiber, and of the likes thereof. And therefore, I think the margins can be pretty robust for a lot of these tire makers. So I think tire makers look interesting at this point of time. And a little bit of the auto ag space, something like a Minda Industries, which I've always preferred, also probably look very, very attractive from a reasonable medium-term perspective.
That's a take coming in as far as the entire auto pack and auto OEMs are concerned. But come tomorrow, we'll be watching out for a lot of data points as well. Of course, on the global front, the UK jobless claims will be important. The unemployment data coming in from there. And with respect to the crude prices, the EEI short-term energy outlook is something that we're watching out for. AGM tomorrow for Raymond may be ahead of that. The stock is a bit excited, so 4 to 5% higher today as well. In terms of earnings, there's not much. There's just one company called Phillips Carbon which will come out with its earnings. But the major ones will start from Wednesday onward when TCS and HCLTech will report numbers. In terms of corporate action, Tatva Chintan has the board meet to consider raising of funds. Some of the stocks like Balakrishna, Dr. Reddy, JSW Steel, Persistent, Go ex-dividend. The anchor lock-in period opens for Avalon Tech, so we're watching out for that. And of course, the GST Council meeting is lined up tomorrow. So that's also there, and the bit on Adani, wherein the court is going to hear the matter tomorrow as well, is something that we're watching out for. But talking about GST, what is exactly on the agenda? Because right from multiplexes to auto companies might get impacted on account of the decisions which are expected tomorrow. Let's go across to Prakash to understand what the agenda is. Prakash.
The GST Council is well set to meet on 11th July, and some important agenda are there for the Council for discussion and approval. Sources are informing that some important clarification may be issued by the GST Council, which is with regard to ambiguity in tax liability on various products such as raw cotton and pan masala. Raw cotton sold to cooperatives may attract 5% GST under reverse charge mechanism. Apart from that, we are also given to understand that GST Council may discuss comprehensive definition for sports utility vehicle and multi-utility vehicle to charge 22% cess beyond 28% GST. We are also given to understand that the Council may discuss GOM report on online gaming, casino and horse racing. When it comes to providing GST exemption on millet-based products, sources have informed that this proposal is also there on the agenda, and Council may discuss it as well. We are getting to know that the Fitment Committee of the GST Council has made this recommendation, and it is expected that the Council may discuss all these proposals. Apart from that, Council may also finalize rules for constitution of GST appellate tribunal. Apart from that, some exemption may also, some other exemption may also provided, and that is with regard to 12% IGST on a certain category of cancer drug. One important clarification is also there that could be issued by the GST Council, which is with regard to food and beverages being sold in cinema halls. Sources are informing that the GST Council may clarify that the food and beverages sold in cinema halls may attract only 5% GST rather than 18%.
Well, that could be a big one, considering a large part of the revenues for multiplexes actually accounts for the F&B revenues. So if indeed it's reduced from the current 15 to 5% or 18 to 5%, that could be a big blow for multiplexes, which are in any case grappling with footfalls. But let's move on. Let's get into BTST ideas going as well before we wind up for the day. Kunal, on your list?
So Tata Steel is the first stock which I would suggest as a buy. Metal stocks, of course, buzzing, but Tata Steel is also one of the stocks which is coming back into a very strong momentum, trading above 115 mark. So I would suggest a buy with 122 as a target, stop loss at 111. And Trent is actually a stock which is showing signs of weakness since the last couple of days. Indicators extremely overbought. So I would suggest a sell on Trent, target of 1650, stop loss at 1710.
Right. Naresh, what about your ideas?
So first would be a buy on Bharti Airtel closer to an all-time high. Stop loss at 880, target price of 905. Second is a buy on Bharat Forge, which has been holding on, making a small flat pattern on Aldi charts. Stop loss at 849, target price of 870.
Okay, so those were the top recommendations and the BTST ideas coming in. Mayuresh, is there any stock, any sector that is on your list right now, the top recommendations?
So, Nisha, a couple of names that we're probably looking at MarketSmith India. One from the pharma space, Zydus Life, looks pretty attractive at this juncture, where most pharma companies are grappling with everyday issues. Zydus probably received the green chit for its Ahmedabad SEZ. A lot of products, some critical ones with high margins, have been launched, expected to get launched in FY24 as well. Margins expected to remain about 23-24% odd. And the top line, bottom line growth, specifically the earnings growth, should be in excess of 18-20% that we track at O'Neill. So Zydus probably looks to be an interesting story. The other stock that we probably like is Tube Investments, a mix of both capital goods and autos as well. The expectations in terms of rollouts that can probably happen, specifically for its three-wheelers, expecting to get good traction. Its EHCV segment expecting to roll out 30 to 50 trucks a month. And the Celestial, which is the tractor model, expected to roll out as well. Expecting a huge amount of traction coming in from these new businesses with better margins. For their core business in particular, the engineering business exports expected to pick up with a very recent volume growth for FY24, along with their mobility business. The other two elements in terms of Crompton Consumer Power has done exceedingly well. And Shanti Gears, its subsidiary, we need to probably account for a holding company discount, still adds to the SOTP value. So yeah, I think good balance sheet, good promoters, mixed Tube Investments, an attractive bet in our opinion at this.
One of the top bets. Yes, we did speak with the management at TI Clean Mobility, and they were talking about those heavy vehicles, saying that there is not much competition in India as of now. They are expecting some sort of production to start over the next couple of years. Even the passenger vehicle is very crowded and they're not looking at entering there. Three-wheelers is something that they've already started the production, and those electric heavy vehicles is something that they're expecting over the next couple of years, and that was the big lever for Tube Investment as well. That's how we are tracking the day as well. Sensex and the Nifty are actually holding up in the green, not by a whole lot, but just marginally so. It's the broader market which have been under pressure today, and the banking names too have been on the back foot today. Case in point being a couple of these private banking names, the likes of the likes of Axis Bank as well as IDFC First Bank. Bank of Baroda from the public sector banking space is also down. Federal Bank down about 1.7%. Mayuresh, within the banking pack, what are your top bets?
So at this juncture, we are liking Bank of Baroda. I think it's largely a consensus call as I see it, because when we're tracking it, a lot of analysts have a buy recommendation. But to a large extent, I think the elements that are in place, asset quality pressure is coming off quite significantly. NIMs might moderate from the 3.3% that they're reporting at this juncture, but still expected to roll out. The SMA1, SMA2 book is pretty low at 0.35%. And the provisioning, which is increased along with very strong CET1 ratios, actually position Bank of Baroda for good growth going forward. Our own sense is that the NIMs should stabilize. The pre-provisioning operating profit should compound at a very decent pace. And they have a very good mix in terms of both the credit deposit ratios as well as the expectations of cost income actually coming down. So I think our best bet in the banking space at this point is that.
Quite interesting. BOB, one of the top bets. But on that note, Mayuresh, Naresh, Kunal, we'll let you guys go on that note. Let's begin winding up for the day, and we're closing in absolutely quiet. No complaints there, really. So 19,421 is where we're starting shop for the Nifty futures. Just a marginal uptick. 19,363 for the Nifty as well. On the Nifty Bank, though, we're closing in just marginally soft. So pretty much a quiet day across the board. Of course, the big star performers were Reliance Industries, which goes home with an uptick of 4%, both on the spot as well as the futures. Metals really came up to the shore. So Tata Steel, SAIL, JSW, they've all had a very good performance. Adani Enterprises has held out very good. There's been ICICI True Life up 4%. Escorts holding up about 4%. And then, of course, there's been Bajaj Auto, which has also seen some follow-through from the moves last week. On the losing side, though, today was Titan all the way. A lot of technology names as well. HCL, TCS, Wipro, they were all in the red. Bajaj Finance slackened after a great show last week. ITC, L&T, M&M, these were all slackening in trade. On the broader end of the market, when in the breath as well closed in the red, there was Balkrishna Industries, fell about 4.25%. RT Industries, which was down about 4%. Glenmark, which fell down by about almost 3.7%. India Bart as well as Indiabulls Housing as well were some of the other key names which were the laggards in the session. Let's just take stock of some of the other counters which were weighing heavy. Z finally settled in lower by about 2% after that 6% crack and then a recovery from the session lows, but still in the red. A Bosch, IGL, HPCL, these were all laggards in trade. There was Deepak Nitrite, which also goes home with a near about 3.5% fall, along with, of course, Jubilant Foodworks, Laurus Labs, IOC, Aditya Birla Capital, and even LTI Mindtree. But closing in flat, not complaining. Some consolidation was on the cards, and it's come. Tomorrow is another day. We'll catch you again with all the market action at 8 a.m.